much. Yeah, this is very sexy, by the way. You're in the right place. Yeah, my background's bringing kind of risk compliance tools from fiat to CeFi to DeFi and Web3, and because that is vital to understand and helping so both projects, platforms, investors, understand with more clarity around where the risks actually are, where they lie. And I also do work with regulators, particularly innovation function, and there's a really important initiative underway in the UK with 4 regulators to try and understand how do they understand the challenges and opportunities for Web3 for the economy, and how can they work at an earlier stage with the industry to develop a more effective regulatory framework that enables a legal and regulatory framework that enables that. So that's my background.
Richard. My name's Dan. I'm an insurance underwriter in London. I focus solely on underwriting crypto and Web3 businesses. And again, not particularly sexy subjects, insurance, but I've probably got one of the best jobs in insurance, being able to deal with companies like you and people like these on the panel. And I bring a kind of at the cold face view of what it is to assess risk and what businesses should really be looking at when they're setting themselves up.
Thanks, and I'll be giving you a call after this. Insurance is very important. My name is Marcus. I'm a partner at Wigan, so it's a law firm in the UK. And we've got a sector focus on media, technology, and IP. And our clients, we represent clients across the whole cross-section of the Metaverse ecosystem, all the way from telcos providing connectivity, blockchain developers, code auditors, those providing blockchain gaming experiences, those building the platforms themselves. And so we focus on providing sort of real-world commercial and also regulatory advice for new blockchain projects. So looking forward to this discussion.
Hi, my name's Jim Holding. I work for Aldersgate Holdings, which is a company owned by DLA Piper, the global law firm. And I operate 2 businesses in this area. Well, I have an investment in one. We have an investment in one and we operate another. We have an investment in Enter Agora, which is operated and run by Will Hamling and the team at Enter Agora. And it really is around providing Metaverse for corporates, particularly around conferencing centres and business premises. And I also have a company called Toko, which is a asset tokenization business that mints security tokens and is part of the law firm. So we have both an interest in the metaverse, but also in DeFi and in security tokens and minting those tokens through Toko, which is based in Hong Kong, but is about to move to Dubai as we have a provisional VARA license at the moment.
Thank you very much. So a real breadth of experience. I think it's important to have that kind of legal perspective, someone closer to the regulation, and someone assessing those risks and trying to ensure projects and for the future and the emerging metaverse. So I want to ask a really broad question to begin with. What does the growing Web3 landscape look like from your unique perspectives? And I guess as a follow-up, what if we're looking at legality and risk? What are these inherent risks when we look at digital asset ownership, IP, and the metaverse?
Should I take that?
Go ahead.
I'll start with it. So insurance is extremely boring and extremely slow. Nothing can't wait till tomorrow or even next year half the time. And nothing does really get done in that time frame anyway. So I've been trying to underwrite crypto businesses since I started insurance. It's 7 years now. And in earnest trying to be doing it for 5. But it's really only this year that the whole industry has come around to it. And it's extremely hard to get a massive group of people to put a big pot of money against what is essentially a gamble on new businesses. So you've got a whole industry that hasn't got the time or the energy really to go and learn what crypto, Web3 and blockchain is. They're not writing products around it. It's very hard to get people on board and on the same train as you might be in here. The general ethos we have in there is just not present in insurance. So it's taken a really long time to come about, but something's happened in the last 18 months where all of the players that were originally in there are prospering, and now all of the biggest incumbents in the market that would traditionally be TradFi, boring old companies that we don't want to deal with. They are the people that are taking the further steps into protecting crypto and Web3 businesses. So I would say, from my perspective, insurance and particularly traditional finance coming into providing traditional products, it's blown up so much over the last 18 months that I think this actually might be that institutional hurdle that everyone was talking for. Once you can get insurance for these businesses and what they're doing, you're going to see those big traditional conglomerates come in and act as though it's a fine environment to be trading within. So yeah, not much change until recently, but I think from my perspective, it's absolutely going to explode with traditional businesses in crypto and Web3.
I'll have a go. So across our different clients we work for, there's quite a few different perspectives depending on which part of the ecosystem you're talking about. So say from the infrastructure layer, say for telcos and those that provide that sort of base layer of connectivity, the metaverse is quite an important use case for future capacity demand. So quite a few are basing use cases on investing in further subsea cable capacity or data center capacity or terrestrial networks. They're using the metaverse and the future demand for more data, better latency, better connectivity as the means for investing further in that sort of future infrastructure. So it's an increasingly important part of the business case for that sort of base layer of connectivity. And then for those that are, so some sectors that we focus on are games and also online gaming and gambling. They've been doing a lot of stuff that we see now, but for quite a few years, but transitioning now from Web 2 concepts to using more Web 3. And so there's a lot of interest in them, but by and large, quite a few are quite traditional players. But in the last sort of 18 months or so, we're seeing more and more interest and engagement in seeing, well, here's an idea, but here's how we're actually going to make money from that. And so from that, we're seeing a lot more activity. That being said, from a regulatory perspective as well, the regulators are also paying more attention to this, particularly as more activity is occurring. So particularly in the online gambling and gaming space, for instance, those sorts of activities are getting more attention from that space as a high critical mass of activities are occurring. So there's different impacts from different players depending on what part of the metaverse ecosystem that we're talking about.
I think that everyone has to realise that the risk, the way people assess risk in big corporates is going to be exactly the same as it is in the real world, as it is in the digital world. And the reality is, for all the companies that are in this space, you want to be able to appeal to every company in the world. You want to be able to appeal to every big corporate in the world. But if you're going to be able to do that, then they have to be certain or sure that the environment that which they are going in, or they're taking their clients in, or their staff in, or their own companies in, is going to be one that is well regulated, and they're going to understand the risk. And that's difficult because a lot of the people you talk to every day don't understand what a security token is, or they struggle with what the metaverse is. They can see it, but they don't truly understand it. And the reality is, if you want to get big companies and big brands into the metaverse or into digital assets, they have to be sure that they understand the risk, and they have to be sure of that risk and be able to manage that risk. And until the metaverse or digital assets gets itself into a position where it can assure those big brands or assure the big corporates that it can do that, the reality is that they may not come in to the extent that we need them to be able to have the money and the business to be able to grow this to its full potential. What we found is that in a lot of ways, in both Enter Agora and in Toko, that we're probably there before the market is. And being a big, large law firm, the reality is you don't want to necessarily deal with those people that are on the fringe of Web3. You want to deal with the up and down corporate clients that you deal with every day. And for that, you need to make sure that they understand the risk and that it's well regulated. And we're not there yet.
Yeah, so I mean, just to very quickly sort of just comment on all those points. So from projects, they're driving their businesses, they're looking for growth. Risk is very complex in this space, so they don't necessarily understand or have the tools to manage that, but that's becoming more important to them as they grow. So one idea with investors so I have interesting conversations with heads of legal for large investors and even some chief compliance officers. They absolutely have for some time now seen this as a critical issue, that if their projects don't get this right, or their investments in platforms don't get this right, it's going to be a barrier to growth for all the reasons you've said. And I think the other trend I'm seeing is development of the regulatory framework. So let's say DeFi as an enablement of Web3 is kind of down there on the list of, it seems to be on regulators' priorities compared to CeFi stablecoins. However, there's some important work that's, first of all, there is enforcement that's happening on projects, right? That is a risk. We see, Yuga Labs, ApeCoin being allegedly investigated by the SEC. We see, sanctions regimes being impacted on tornado cash. That's an enabler, and that's DeFi rather than the projects themselves. So there's definitely action. So of course these projects operate within an existing legal regulatory framework, and regulators and law enforcement will use the tools where they see the risk, and as these projects become bigger, as their profile becomes bigger and they perceive the risk becoming, they will act. And so the need to understand that and evidence of that is clear, and will only become important as things like FTX shine the light more generally on crypto, even though that's a CeFi, not a Web3 and DeFi initiative as well. But the good news is, I think that if you look at the policymakers, they see the benefit of the Web3 economy, and so you do see things like in the UK, the Law Commission doing some really important legal groundwork around looking at the status of digital assets. Is that sufficient in private law to enable the economic growth, and also their work around DAO structures as well. So we're sort of being proactive, and we see that in other key jurisdictions.
Well, let's dig into that a little bit. I'd love to understand where do we sit now, in terms of regulation, in the way that we assess digital assets, and where do we need, and of course, projects in the metaverse more broadly, and where do we need to get to see this kind of trust for brands and for projects to, like the big clients, as you said, Jim, to feel the trust to be able to enter this space? Where maybe you're the best to open on that, Richard, on the current sort of way we're looking at the regulation.
Just to pick up on the last point. So, every project has to operate within a legal regulatory framework, and I think and people look at it from different lenses. If you look at the crypto frameworks, if you look at what's happening in MICA and in the EU, that's focused around where they perceive the risk is, and where that's the activity, which is centralized finance. I mean, NFTs. I'm not sure if it's in scope or not scope. I've lost track with that as well.
Seems out of scope.
Yeah, thank you. Isn't within scope. So you kind of, on one hand, you have this. It's kind of on. DeFi, Web3 is a bit on the back burner within the crypto regulatory framework. But as I said before, you see enforcements that impact DeFi and Web3 projects where they see risk on that. I mean, I without going into detail, but I think that's where we are. However, I think at policy level, and I think what's happening in the UK is interesting. We have we have a digital regulatory collaboration forum, which is 4 UK regulators coming together, and they want to engage really early stage to understand Web3, what the potential is and the opportunities, and how can they develop an effective regulatory framework, holistic regulatory framework, to enable the responsible innovation and growth in this, as well as understand the risk and harm. So I think as a technique and approach, that early engagement is a really encouraging approach to understand the specific opportunities and challenges and what the regulatory framework should be like for Web3 specifically.
And I think one of the difficult things about it is the nuance of what they're saying in terms of regulation in these meetings, what they come out with as an outcome, and then the impact afterwards. So we're seeing a lot of, let's say, US regulation or not even regulation, but the right people talking who are using terminology about Web3 and crypto in a way that really doesn't apply or isn't the right way to go about it. I think, as we said with MICA in the UK, we've gone to a lot more effort to make sure that we're scrutinizing the regulation properly, and that we've got the right people in the room and everyone understands what's going on. But there's always that danger of something gets put in place and then there's going to be a disastrous outcome. And for me, I'm kind of, I have to follow regulation because that's what we're going to be protecting businesses against. Sometimes they're going to do something that's regulatory incompliant, and we're going to have to fork out for it. So I'm always trying to understand what the regulation might be in the next 12 months, because that's what an insurance policy is. It's always going to be 12 months or so. So kind of got to look 12 months ahead. But there isn't anything I've seen that's made me worried or scared for particularly UK regulation. It's just slow. It's really, really slow. It's really about time it's happened. And we're naturally all maybe a little, not on this panel, but as a community, adverse to regulation, and that's kind of why we're doing what we're doing in some respects. And I think that's still going to stay. We're not going to have a great deal of sway unless we're in those meetings. But I think once people are up at these conferences and they're ending up at the conferences that are a lot more about regulation or legal or compliance, and we get the people that are in this room or talking on these panels in there with them at the right time, that's the right way to do it. I just fear that doesn't happen, but we'll see.
Just on that, so, I mean, the law traditionally is quite slow when it comes to picking up on trends in the actual economy. And particularly for crypto and Web3 and the Metaverse, it's moving so quickly that the law is even sort of relatively further behind than it normally is. In many ways, coders might need to get a law degree, and lawyers need to learn code, because the importance of the interrelation between the two is even more important because of just how it all works. But that being said, I mean, the common law system that we have here in the UK, it does have the tools available to us to have effective rules and codifying sort of things in place to create that certainty. That there are sort of a growing collection of leading judgments and cases that have decided things where, for example, it's possible to serve proceedings by NFT to someone's wallet. You can't do that. They recognise digital assets as property. That's fine. But there's other interesting questions, like, for example, would a blockchain developer making a software protocol, would they owe a duty of care to a user? Let's say if there's an exploit that's discovered, someone loses their private keys, and then somehow that sort of leads to them losing billions in crypto. Does the developer owe a duty of care to that particular user? Now, traditionally, you might say, well, no, because there's reasons, but because of the amount of control that developers, in this case for a Web3 application, because of the amount of control that developers might then have over the outcome, you might argue yes. So these are some questions that are being considered. The rules are in place to do that, but there's common law and there's also regulation where the government needs to step in. But often what's happening is that consultations are taking place. Meanwhile, billions have already been lost because of some event that took all of a week to take place. So the law does eventually get there, but because of just the nature of the metaverse and how quickly things are moving, it does feel in many places that we're a bit slower behind what we normally are.
I think the reality is, if we want mainstream businesses, and I mean proper mainstream businesses, to come in and use either the metaverse as a marketplace or the metaverse as somewhere they transact business, or they use internally or externally with their clients or their customers, or you want to get banks that are happy to use digital assets or be involved in the as dealer brokers in digital assets. The reality is you need to have a proper, strong regulatory environment that means that there is certainty, because they're not going to put at risk $1 unless they have certainty. And I think as we've said already, there are tools there in private law that you can use, but they're contractual tools. They're not necessarily regulatory tools. And until you have a proper regulatory environment where people know the outcome, particularly if there are retail investors or retail consumers involved, then I think it's going to be hard to convince chief risk officers, CEOs, general counsel to put a lot of money into these environments where they perceive that the risk is there. The one thing, this is moving incredibly quickly. If you'd come to me 18 months ago and said, this is where the business would be, I would have said, well, I don't think so. I think it'll take a lot longer, but it's moved incredibly quickly to get here just in 18 months. But there still is a long way to go, because unfortunately, the law is slow, governments are slow. Governments at the moment have a lot on their plate in a lot of different places, and they don't necessarily see this as the highest priority until you get something like FTX happening, and you have a lot of consumers that are up in arms saying, why didn't you tell us this, or why wasn't this regulated, and why have I lost my money, why have I lost half of my pension or superannuation, what's happened? That's when you start getting a call to arms in the government. But even then, you don't want to have knee-jerk regulation on that basis. You actually want to have well-considered regulation that is actually going to facilitate an industry rather than just being about consumer protection as well.
Since we've come back around to FTX a second time, I wonder if anyone else wants to weigh in on on the topic of what happened there.
I might be able to, because I had FTX come across my desk, and when you're an insurer, you basically get to see everything. And we use several tools and several opinions, all kinds of things in crypto and Web3 specific to try and identify risk, possible crime. And then we've got 330 years of the insurance industry writing insurance, which I promise you hasn't changed at all in that time. So we've got quite a lot of background for traditional risk and better expertise now in crypto and Web3. And sorry, what was the question again?
It wasn't really a question. It was like passing
FTX, right, sorry,
back
okay,
around
yeah.
FTX
My
since
apologies,
we've
yeah, so-
landed there a few
So did you
times.
guys write it or not?
No, we didn't. We didn't, but we know who did.
That's what we want to know. Yeah.
Yeah, no, we didn't. But the thing, my point was, we went right through it and didn't see anything that would even slightly suggest that this was the case.
Well, can I just, because isn't the problem about FTX? Oh, I don't know. We'll see what the problem. The alleged problem with FTX is all this stuff was off-chain, right? So everyone talks about, oh, it's blockchain, it's transparency. That's the point. The point is, everyone thinks this is a crypto story. You know, I think this is a good old-fashioned. Okay.
Fraud.
So again, thank you.
Yeah,
That's what it is.
absolutely,
And everyone thinks, oh, it's crypto. It's not. It's just, and it was done off-chain. It was all clients' money being used for all these nefarious purposes. And that is the point. And I think the danger with it is everyone puts crypto, everyone labels this as a crypto issue. Oh, Web3 is enabled by DeFi. That's crypto. It's all. And we have to get people will get forensic. I'm sure the law enforcement will get forensic on it. But in the meantime, the industry has to be clear and to call out what this is and why actually, and what it's not, and how the transparency about on-chain transactions, DeFi, can potentially solve these problems. We need more on-chain, not less.
And the regulation in many markets focused on anti-money laundering concerns, right?
It's not
in the UK, EU,
Yeah.
many other places, and so. But the issue is not a failure of crypto. It's a particular actor or very small number of actors making decisions off-chain. But that's obviously it's all well and good to say that, but the reality is that it's going to have an effect on the entire ecosystem.
Yeah, not only that though, like I am fully on the side of on-chain everything. I'd rather just have that, and I get the transparency you get from it. But like with that submission we got, between all of their documents, auditors' documents, accounting documents, how do so many people go through all of these processes and don't find anything that's going to allude to what happened? I agree, on-chain transparency is a good solution to that, but you're always going to have TradFi businesses in Web3.
And you're going to have CFI and intermediaries. So the issue becomes, so what's come out, I don't know if you go over all this, because obviously everyone's talking about this and has been for some weeks now, but or however long it's been. There's basic failures around governance controls and there's bad actors, but there's also, they're in a regulatory regime where they don't have audits. So the other centralised entities that are regulating other jurisdictions have other obligations, third-party audits, proof of reserve. So those are controls.
Minimum capital controls and reserves.
Those are controls, right? Yeah. So it's good old-fashioned governance and controls and systems and audit, and it's just basic stuff that wasn't applied, or if it was applied, probably wasn't applied. Certainly, it wasn't complied with.
Okay, I think what I'm trying to say though is, of those people that are going to do that, crypto and Web3 can kind of draw them towards that, because they can create an opaque system and what's supposed to be a transparent system, and then they laud around looking though as though they're holier than thou, and that's not the case. I think we're always going to have these scumbags, to be honest. It's just there's going to be far less of them, I hope.
We have them now, right?
We have them now. And we were on a big meeting with loads of insurers, and they were talking about all these maybe people in the background working things in VCs and stuff. And we said to them, you've got the boogeyman in front of you. That guy there, Sam, this is all before this happened. So we've got enough bad people we can look at and point to have to worry about some cabal running stuff in the background. So we're going to have to keep going through these peaks and troughs, but hopefully we'll flush them out.
I think the other thing is that until we get proper regulation, or we basically mainstream what the metaverse and digital assets are doing, the reality is you're going to have fringe players coming in, and if you haven't got a proper regulatory environment where people are properly regulated, that they're licensed, that there is a way of doing it, that there's third-party audits, that there's standards, that there's reserves, it makes it relatively easy for those fringe players to set up a business and then to be able to transact that business almost internationally, almost instantaneously, which traditional business did not necessarily enable people to do. So if the goal, for me, the silver lining on FTX, if there is a silver lining, is that it may be the turning point around which you see a lot of the fringe players actually no longer being able to do what they've been doing. Hopefully in the long term it'll clean out a lot of that, and that you will have more traditional mainstream players come in. One other thing is as well, this is where it gets dangerous or a little bit for players in this system, is though if it requires a large ecosystem to do something and a lot of players in that ecosystem to do something, ultimately you're only as good as the weakest link in that ecosystem. So that's also a real issue for people, is that if you've got 6 different entities, whether they're custodians, whether they're tokenisation, whether they're dealer brokers, whether they're an exchange, all of those, if you haven't got really high quality, well-trusted, almost peer auditable across that ecosystem, then even as higher qualities or standards that you've got in your own company, you are at risk because one of those players in that ecosystem could cause your transaction to go bad and cause you huge reputational damage even though you've done nothing wrong.
No, thank you very much for all your answers around that. And could speak about FTX for a while, right? It's front and center for sure. So we talked a lot about kind of DeFi, crypto, digital asset ownership, but when we talk about the metaverse, it goes beyond that, right? There's, everything from like art, music licensing, intellectual property ownership. This is a whole other bag in the metaverse sphere, and when we're dealing with a complex environment where people are behind an avatar, and there's, a lack of transparency sometimes. What are some of the biggest challenges, I guess, legally and in regulation for kind of managing those other aspects? And there's a lot.
Insurance and IP it's gone. It's dead. Thank you. Insurance and IP is long established, people have been doing it for ages, but everyone is scrambling to keep up with what that means for Metaverse and Web3 stuff. Just the difference between having stuff on chain, having some self-sovereignty in it, being able to trade and pay for NFTs, things like that. They are very poorly trying to apply traditional IP onto those kind of formats, but who knows, that might be the best way to assess IP going forward. Future. Yeah.
I think the reality is that if you create the metaverse and you want big brands to be in that metaverse, then they are going to have the same concerns, the same risk assessments, the same reviews as they do in the real world. So if you're inviting brands to come into the metaverse and you are either as customers or as suppliers or as users, then they're going to have exactly the same issues that they've got around whether that was a real store somewhere in Manchester, for example. They're going to have the same issues, they're going to have the same concerns. So you really have to, notwithstanding how new this is and how cool it is and how great it looks, you really have to make sure that you have got everything bolted down legally to ensure that there are no nasty surprises. Because particularly in this early adopter phase, if there's a huge problem or someone gets stung badly, then it's going to set back the metaverse, set back digital assets, because there will be a lack of trust. And that's really what it's about. It's about trust. Big brands won't go into something unless they trust it, that they're not going to get bitten or they're not going to suffer reputational damage, probably even more than financial damage, unless that they are satisfied that you've done all the proper DD, that you've got in place the safeguards that are going to protect them and their product as if it was in a real bricks and mortar store.
So why are some brands already like fast to action? I'm talking big consumer brands, Nike, Adidas, you know, these sorts of brands are already experimenting in this space. What's the difference, would you say, for those?
I think at the end of the day, there are lots of early adopters that are out there, whether it's banks, for example, DBS in Singapore.
HSBC?
Yeah, like DBS, for example, has got its own tokenisation, internal tokenisation. It's doing a lot of work. I mean, we are seeing a lot of mainstream clients coming to us to talk about whether it's Enter Agora or whether it's Toko, because they want to be involved, because they see that this is pretty interesting, this is pretty cool, this could be a brand new market for them. So they want to know that. But unless we can provide them with that certainty, then I don't know whether they're going to stay, or they'll turn around and say, you know what, let's do this ourselves. Let's do this internally so we actually know of the safeguards, we understand that it's been built to a standard that we're happy with, and we have trust. But it's that same thing. I mean, if you were Nike, would you be building your own stores? Probably not. You'd probably have some other people do it, or you'd rent it, or you'd use a common space. But that's going to be one of the temptations for those big brands is, do we do it ourselves? And the banks are a good example in digital assets.
Just one point to add, 'cause I don't have much to add on IP, but the key consideration from my point of view in insurance is the methods by which, or the technology by which you are releasing this IP or using this IP. Because, for example, really basic example, if you put something up as an NFT, let's say it gets traded to someone else and that needs to be rescinded, or it goes to show that that IP is infringed on something, you need to have a way to be able to rescind it or destroy it or find some way to be able to remediate the problems that's happening. Because before, you would get fined for your use of the IP and then possible loss of earnings or possible earnings you've made, and that's how it'd be judged. But now it's a case of, if something goes horribly wrong and we can't rescind it, does that mean losses carry on forever? Or do they go on much further past than we would with traditional technology? So now what we're looking at with IP and metaverses and these companies is, how can you handle that traditional IP in a way that's going to bring those big brands on board, because they're going to be comfortable with your recourse or whatever remediation you have to do to be able to deal with that IP that's infringing.
And just quickly on that, so what we're seeing is a lot more scrutiny over the software itself. So to that point exactly, because of the typical immutability of the code, the limited ability for the protocol to actually be changed later on, because that's the point, then if there's any issues, exploits, bugs, problems, breaches that are inherent in the code in the beginning, it's going to stay that way. And so therefore that increases the risk profile of whoever it is that's trying to offer it in the first place. It's also a question about, well, people talk about these blockchain projects. Well, quite often it's based on open source licenses. But again, open source licensing doesn't mean it's free. It doesn't mean you can do whatever you want. It doesn't mean that there are no restrictions of what you can and can't do. But many often overlook these points. And so because of the nature of these, the sort of the persistent nature of metaverse sort of products, then these issues do come to roost. And so you have to look at it at the very beginning, as opposed to waiting for an issue to come up later on, because if that does happen, it could be too late.
Sorry. Hello? Yep. It's like Russian roulette with microphones. So just a follow-up point on that. There's a technical issue that I was actually discussing with Neo actually from Consensus after her session, which is also so there's a technical issue with NFTs and multi-chain. So obviously there are different standards as well. So and not all metadata goes across chains as well. So if we talk about the metaverse and the value of that being interoperability, the ability to trade those assets, take those assets from one game to another game, there's actually a technical issue and question mark around, do you have the mechanisms, to actually take those rights with you, right, around those assets as well, just because of the different standards. So there's a whole issue around standards that the industry needs to do to kind of solve this in a multi-chain environment as well.
I don't trust it.
One extra thing I could say
Yeah.
that people might be a lot more familiar with is just the licensing with some of the biggest NFT projects and how badly some of them have gone. You'd think it's really straightforward, but apparently not. If it's not Creative Commons Zero license, then it's probably going to be a shit show at some point.
So I want to give a little bit of time to the audience to ask a couple of questions, because it's I'm sure people are probably building projects or thinking about things in this space and have some questions. So please do have that in mind. I'll be coming for you after this. So I wanted to just ask, when we talk about, just touched on standardization, this concept of interoperability will be a thing. And how can the industry now work with the current frameworks and around standardization to see, a better level of trust and help onboard those clients that we want to see the mass adoption?
There are industry associations that are working on this. So some of them are working across CFI and DeFi, and I think it's worth projects. So I was talking to Sebastian actually about the Gaming Blockchain Association, getting those involved. So I think it's really important that the industry organises, and either through existing organisations or through new ones. And I think the use case of gaming should be out there, because it is the use case area where we see most traction, most investment, most development. Well, a lot of. I don't want to rank them as well. So I would encourage those involved to work through existing associations and try and connect the dots to where there are initiatives around best practice and also where they exist, where policymakers and regulators are, they are creating mechanisms for engagement. So if anyone's interested in the Web3 symposium, just contact me afterwards as well, because a number of the people, including Amit, who spoke earlier, is connected with that as well. I think that's an excellent early stage opportunity to shape policy and help educate and understand and share best practice on what those assets are.
From my perspective, it's working with people in risk. So it could be any part of risk, but as long as you're working with those traditional people that understand traditional risk, as well as the risk specific to your company or your sector, I think that's the best way forward for anyone. There is no right person to go to or right company to go to. And I wish there was more of a stronger kind of committee or community around it. What it tends to be is a lot of people really, each one of these committees, a lot of people extremely interested in it, but are still learning and trying to come up with what should be done at the same time. We need people, unfortunately, that are really deep in the technology, do have some either financial risk or legal perspective, to come in and essentially altruistically donate their time and expertise. That's the only two ways I see it. Either it's going to be those committees where everyone joins in, or you're going to be paying someone specific, and it has to be the right person to assess your company. But either way, working with people at the coalface of it, whether it be law, risk, or compliance, is the only way at the moment I can see you really working that out. Sorry, I didn't have this up the whole time.
Cool. I think we've got time for maybe just one quick question, yeah? Has anyone got a question for our panel?
I saw a hand go up here. Just beat you.
Mo, head of product at Lamvo. I actually have 3 questions for you, if that's all right. Just one? Okay.
One question in 3 parts.
One each.
Okay, well, so seeing that there is, at the moment, quite a lot of projects happening, and the government and the governing bodies are struggling to catch up with the different projects that are being created. One of the challenges that we're finding is that quite a lot of the consultants that we speak to essentially just take the same policies from Web 2 and try to implement and apply it into the Web 3 projects. Having said that, do you think that there will be a new type of governing bodies where they can take into consideration the technology of Web 3 and actually develop specific policies for those projects?
If you have a look at VARA, that's just been set up in Dubai, which is the Virtual Asset Regulatory Authority, it has at this stage become the one-stop shop for digital asset licensing and regulation in Dubai. The regulations aren't finalised yet, but they're being done. It allows to issue licenses to dealer brokers, for example, in digital assets and virtual assets, without necessarily having it has the authority to do that without going back, for example, to the FCA equivalent here in the UK. So I think where you look at a regulatory body that is trying to regulate the digital asset area within a country, it's important that it has the authority or the expertise or the ability to be able to do that in all instances, rather than have 5 or 6 different regulatory authorities that are trying to regulate the same entity or business. That gets very confusing. So, and also creates a lack of trust for people using it, because they're not too sure which law is going to apply, or which regulator is going to come after them, or what regulatory regime they have to comply with to be able to do that business.
And just quickly, so in the UK, there's cooperation between Ofcom, CMA, and there's cooperation between those that look at communications, competitions and markets, the financial services, because you need to get cooperation between the different groups to then actually give a holistic answer and regulatory regime to these areas, because it cuts across so many. So short of creating a new body, right, I think cooperation between different groups is going to be, we can see more of that. But also it's a different approach, because, for instance, if we're seeing more decentralization, you've got less and less of a situation where you can point to a particular body saying, look, you're responsible for ensuring this, because the point is there isn't one. And so instead of having that approach, the rules might say, look, if you're going to set up a system, if you're going to have smart contracts regulating this particular interactions, then the smart contracts need to meet certain standards. It needs to do certain things. You've got to have certain protections built in place. And so the approach to regulation as well will need to change as we go sort of further down that spectrum of more decentralization, because that has to lead to a different regulatory response, because, again, you've got no one responsible body for an activity or an ecosystem.
And there's definitely going to be bodies making specific regulation laws for that. The unenviable thing is how quickly stuff changes, and there's a new problem every week. And I'd love to say maturity in the law is having these specific groups actually go back into the more generalized groups and everyone's included, because we're talking now on a base where we kind of get it, but I don't think that would be the case, and I think it's actually just going to get a bit muddier rather than more general.
Yeah, so I'm just trying to answer the 3 parts of your one question. So the Digital Regulatory Cooperation Forum is the mechanism, and obviously, you're talking about Dubai mechanism. We just need those, and the good news is regulators see that. To Dan's point, yeah, but regulation is really slow. So what the regulators have said on, I call it DeFi, but they say DeFi is enablement of Web3, is they need the industry to come together on best practice and standards, and then and I think so. We need the industry mechanisms to do it, as I said before, and then to be an effective counterpart to the regulators. And then the third part where you started, which is, you work with consultants who put Web 2 frameworks onto Web 3. That's because they're not the practitioners, they're consultants, right? So what we need are the people at the forefront, the practitioners, You know, whether it's the people up here, well, the projects, the platform, the investors, you know, because I talk to global investors who see this as a problem, to come together through those mechanisms, so industry mechanisms, and together with the regulators, because it's moving so quickly, they need to surface the issues from their perspective and get that holistic view, and then the consultants can come along afterwards at some point 5 years later when they've worked out how to monetize it, right? That's my view. Oh, sorry.
Thank you very much. That's all we have time for. We have run slightly over. But I want to say a big thank you to everyone on the panel. Dan Ross, Jim Holding, Richard Matten, and of course Marcus, who stepped in last minute, so really appreciate that. A big round of applause for all our panelists and all their wonderful insights. Thank you very much. And over to you, Adam.
Well, folks, there you go. Wading around in regulation. A very interesting place in the wake of the FTX fallout. I'm sure we'll all agree. Okay.